If you've already filed your taxes this year, I'm not going to start with anything complicated. I just want to ask you one simple question. Are you absolutely sure you didn't overpay?
I mean, I already filed. The software handled everything. It should be fine, right?
That's exactly how most people think. If I filed, I did it right. But the reality is, most people don't file incorrectly. They just quietly overpay. And we're not talking small amounts. In many cases, it's $3,000 to $10,000 a year. Think about that over 5 years.
That's a whole car and not even a cheap one.
And the scariest part is, this isn't a mistake. You just don't realize it's happening. You could be doing the same thing every year, filing correctly, but still overpaying. So in this video, I'm only going to do one thing to help you clearly see whether you've been losing money without even knowing it. Welcome to Ivy Smart Tax. If this is your first time here, let me quickly explain what we do. We don't teach you how to fill out forms, and we don't teach you how to click through software. Because honestly, the software already does that.
Yeah, I don't even want to look at it. I just click next.
Exactly, that's how most people do it. Automate whatever you can, skip whatever you can. But here's the problem. Taxes aren't about finishing the form. They're about whether you use the rules correctly. So this month, I'm doing a tax update series. And I'm focused on one thing, taking complex tax rules and turning them into one simple question. Does this actually affect you?
So this isn't theory.
No, I only focus on 3 things. What changed? What you might be using incorrectly? And where you're already losing money? And most of the time, it's not that you can't do it. You just didn't know the rule existed.
That sounds kind of risky. I feel like I've probably missed something.
You're not alone. This is where most people are. So as you watch, keep asking yourself one question. Am I in this situation too? Let me help you quickly figure out whether this actually applies to you. If this year you earn over $200,000, live in a high-tax state like New York or California, or have side income, 1099 income, then your current situation is likely. You filed correctly, but didn't actually save.
Wait, those 3 things you just said? That's literally me.
Then you need to watch this. Because in this situation, there's one very common issue. You feel like everything is fine, but you're actually overpaying every year.
But when I filed, the software didn't flag anything.
Right? Because software won't tell you you could have paid less. It only tells you your calculation is correct. But here's the problem. Correct is not equal to optimal. I've seen this so many times. People feel confident every year, like, I'm done, everything's handled. Until one year, they realize they've been overpaying for years.
That must feel pretty bad.
It is, because you didn't do anything wrong, you just didn't know. So as you watch, keep asking yourself one question, am I in this situation? And if you're even a little unsure, then this video already matters to you. Let me share a real example I saw recently. 2 clients, almost identical income, both around $300,000, both in New York.
Sounds exactly the same.
It gets even better. They were using the exact same tax software.
Then the results should be pretty similar, right?
That's what most people think. But the results were completely different. Client number 1 did nothing special, just filed normally. Fill it out. Submit. Done. Client number 2 did some simple planning before year-end, adjusted a few things structurally, timed some expenses ahead of time.
That doesn't even sound complicated.
It's not. No advanced strategies, nothing aggressive, just standard tax planning. But the final result, over an $8,000 difference in taxes.
Wait, same income, same software, $8,000 difference?
Yes, and this isn't rare. I see this all the time. So the real question is, why is the gap so big? Because one person was doing this, calculating tax, and the other was doing this, designing tax.
So the real difference isn't filing, it's what happens before filing.
Exactly. Filing is the final step. The difference already happened. A lot of people assume same income equals similar taxes. But in reality, people with the same income often have differences of thousands, even tens of thousands.
I feel like I've been the first person this whole time.
You're not alone. That's the majority of people. But here's the problem. If nothing changes, that gap repeats every year. It's not just 1 year of $8,000. It's 3 years, 5 years, over and over again.
then it's not a small issue anymore.
Exactly. This is a structural problem, not a one-time mistake. Let me ask you something honestly. Have you always thought that tax software is actually smart?
Not just smart, I think it's smarter than me.
Exactly. A lot of people feel that way, especially when you see it calculate everything instantly. It makes you think, okay, it probably handled everything for me.
Yeah, every year I just go, fill, next, submit, done.
I know that flow very well. Some people don't even read anything. They just keep clicking continue.
I'll admit it, that's me.
But here's the problem. The software is smart, but it only does one thing. It calculates what you've already done, but it doesn't ask, did you do this the right way?
Wait, so it won't tell me I could pay less?
No, it's not going to pop up and say, hey, you could optimize this. You could reduce your taxes here. It's like a very obedient employee. You give it inputs, it processes them. But it won't come back and say, there's a better way to do this.
So it's not actually helping me save money.
That's the misunderstanding. A lot of people think they've already used every rule available. But in reality, they just processed the data they had. That's why this situation is so common. You file completely correctly, but still overpay.
That feels kind of unfair.
It's not unfair. That's just how the system works. If you don't actively use a rule, it doesn't apply. So the issue isn't the software. It's whether you did any planning before you filed. All right, let's look at something a lot of people have been talking about lately. The SALT deduction.
Yeah, I've heard about that. Didn't it get better this year? Like you can deduct more?
That's what most people hear. Usually something like, you can now deduct up to $40,000.
Yes, exactly. When I heard that, my first thought was, okay, I'm definitely saving a lot this year.
That's the common reaction. People hear a number and assume it applies to them, but here's the key issue. That $40,000 is not for everyone.
Wait, what do you mean? Isn't that available to everyone?
That's the biggest misunderstanding. People hear the benefit, but don't hear the limitations. And in tax law, the limitations often matter more than the rule itself.
So the real question isn't, does it exist? It's, can I actually use it?
Exactly. The key isn't, is there a $40,000 deduction? It's, do you actually qualify for it? And for many high-income taxpayers, the answer is, you don't.
So it sounds great, but you can't actually use it?
Exactly. That's why a lot of people finish filing this year and feel like, I thought I was going to save more, but didn't. And some people don't even realize they missed out on deductions. So think back to when you first heard this rule. Did you ask yourself, do I actually qualify?
Honestly, I only heard the $40,000 part. I didn't think about the rest.
You're not alone. That's exactly how most people hear it. Let's clear this up. Why do so many people hear $40,000 but don't actually get it? The answer comes down to one thing: income limits, phase-outs.
So the higher your income, the less you can use it?
Not completely gone, but reduced. Once your income reaches a certain level, that deduction starts to phase out. And in many cases, this shows up more in higher income ranges, especially around $500,000 plus.
So not everyone is affected?
Exactly. That's where people get it wrong. A lot of people hear the rule and immediately assume, I get the full $40,000. But in reality, those are two different things. The rule exists, but whether you get it is separate.
So it's like you can see it, but you might not actually get it.
Exactly. It's like something on the menu, but you can't actually order it. For many high-income taxpayers, the reality is you can use it, but far less than you expected.
So how do I know how much I actually get?
Most people don't calculate it and they don't verify it, which leads to a very common situation. You think you're getting the full benefit, but in reality, it's a reduced version. And that gap is the extra tax you end up paying.
So it's not that I filed wrong, I just misunderstood.
Exactly. Your calculation was right, your expectation wasn't. Let me give you a more realistic example. A client in New York, income over $500,000, state tax plus property tax around $60,000.
That sounds pretty typical.
It is very typical. When he first heard about this rule, his immediate reaction was, great, I can deduct $40,000 this year.
That's exactly what I would think.
But here's the issue. Because of his income level, that deduction had already started phasing out. So the actual result was he didn't get $40,000. He got closer to $10,000.
Wait, so he thought he'd get $40,000, but actually got $10,000?
Exactly. That's a $30,000 gap. And if you apply a typical tax rate, that turns into about $5,000 to $10,000 in extra tax.
That's not small anymore.
Exactly. And here's the most important part. He didn't do anything wrong. His return was correct. The software calculated everything properly. The issue was he assumed he'd get the full $40,000. That assumption is where the extra tax came from.
So the problem isn't the rule, it's how I understand the rule.
Exactly. That's why so many people finish filing and feel like I thought I'd save more, but didn't. And if you're thinking right now, is this happening to me? There's a good chance it is.
I'm honestly a little afraid to check mine now.
You're not alone. This is extremely common. That example we just talked about at least had one assumption. You could have taken the deduction. It was just reduced because of income. But the next issue hits even harder for a lot of people because you didn't even use deductions you actually qualified for.
Wait, you're saying there are savings available and I didn't use them at all?
Exactly. And this happens far more often than people think. For example, there are new deductions this year, things like tips or overtime. And when people hear that, their first reaction is, I should qualify for that too.
Yeah, it sounds like it applies to everyone.
But that's the issue. Tax law is never, if it exists, it applies to you. Every rule comes with conditions, limitations, classification requirements. And if you don't confirm those, then effectively, you don't get the deduction.
So it's not that I didn't have it, I just didn't use it.
Exactly. I've seen many people finish filing and feel completely confident, like they've used everything available. But in reality, they only entered the data they already had. They didn't check if anything was missing, if something was misclassified, or if anything could have been adjusted.
That sounds risky. I've never even thought about that.
And that's the issue. It's not that people don't want to save money, they don't realize they can. So ask yourself this: did you actually verify your deductions? Or did you just assume, if the software didn't flag it, I'm fine?
Now I'm not so sure anymore.
And if you're starting to feel unsure, you're already getting closer to the answer. All right, let's do a very simple self-check. No calculations, no forms. Just think for a moment. When you filed your taxes this year, did you actually do these three things? First, did you confirm which deductions apply to you? Not just, I heard about it, but actually checked whether you qualify.
Honestly, I just answer whatever the software asks.
That's the first type, very common. Second question, did you review the conditions for those deductions? For example, what income qualifies, what doesn't, and whether there are limitations.
To be honest, I usually just skip those explanations.
You're not alone, a lot of people do. Third question, and this is the most important one. Did you verify that your data was classified correctly?
Classified? Isn't income just income?
That's exactly the issue. In tax, classification directly determines whether you qualify for a deduction. So many times, it's not that you don't have the income, it's that it's placed in the wrong category.
Wait, so I could have the opportunity, but because of classification, it basically becomes zero?
Exactly. So now give yourself an honest answer. How did you do on those three questions? If even one of them is unclear, there's already risk. If all three are unclear, there's a very high chance you're already overpaying.
I just counted. I'm unsure on all three.
Then you're in the same position as most clients I've seen. It's not that you weren't trying, it's that the system doesn't flag this. That's why people end up thinking, I'm done, when in reality, they've only just started. Let me give you a very real and very common example. A client with side income, 1099 income, and quite a bit of expenses.
That sounds pretty normal.
It is very normal, but there was one issue. All of his expenses were on the same card, completely mixed together.
Wait, that's literally me, business and personal, all on one card.
Exactly. That's the key issue. When it came time to file, he did provide his expenses, but they weren't separated, business versus personal. And in tax, it's not enough that you spent the money. You have to show that it was for business use.
So if you can't separate it, you can't use it?
In many cases, yes. So what happened was, he did spend the money, but none of it showed up properly on the return. Deductions he could have taken weren't used. The difference? about $2,000 to $6,000 per year.
Wait, so it's not that I didn't spend it, it's that it didn't count?
Exactly. From a tax perspective, it's like it never happened. And the most important part, he had no idea. Because in his mind, I gave all my data I already filed. But the issue is, if your data isn't clearly separated, it has no real value.
That feels worse than making a mistake.
Exactly. Because nothing flags it. No errors. It just happens quietly. Have you noticed something interesting? Everything we just talked about only gets discovered after filing.
Yeah, you only realize it after everything's done.
And that's the problem. Filing your taxes is actually the final step. What really determines how much you pay isn't what you do in April. It's what you did throughout the year.
Wait, so it's not about how you file, it's about what you do before?
Exactly. A lot of people treat filing as the starting point. But in reality, it's just the result. It's like an exam. By the time you turn it in, your score is already decided.
So if I'm just realizing this now, can I still fix it?
In some cases, yes. But in many cases, it's already too late. Things like deductions, structure, classification, those usually need to be done in advance. By the time you file, you're reporting what happened, not redesigning it.
So if I'm only realizing this now, I'm already behind?
In some ways, yes. But that's not the main point. What really matters is whether you repeat this next year. Because if nothing changes, these issues become a pattern and happen every year.
Then it's not a one-time loss, it's ongoing.
Exactly. So shift the question. Don't ask, did I file correctly this year? Ask instead, did I plan ahead? Let's go one level deeper. A lot of these issues aren't one-time problems. They come from your structure not being set up properly from the beginning.
Structure? You mean like entity structure?
Exactly. Things like what entity you're using, how your income is set up, whether it's allocated properly. These decisions determine whether you have room to optimize later. If you didn't think about this early on, then later, a lot of tax rules simply won't apply to you.
So it's not that I don't want to save, it's that I don't even have the opportunity?
In many cases, yes. And this kind of issue doesn't just happen once, it repeats every year. The final difference is whether you have a strategy. Most people do the same thing every year. Time comes, file, done. But the people who actually see a difference do one thing in advance. They plan.
What does planning actually mean?
It's simple. Looking at your income ahead of time, timing your expenses, making adjustments to your structure. None of this is complicated, but the impact is significant. I've seen this over and over. People with the same income end up with tax differences of thousands, even tens of thousands.
So it's not about skill, it's about whether you did it ahead of time?
Exactly. Let's quickly recap. First, rules you thought applied, like SALT, may not actually apply to you. Second, there are deductions you could have used but didn't. Third, timing. You started thinking about it too late. Fourth, your structure wasn't set up properly. Fifth, there was no strategy. None of these are mistakes, but the result is the same. You end up overpaying every year.
So it's not a one-time issue, it's a pattern.
Exactly. If you've already filed your taxes this year, the next step isn't to look back and overthink it. It's to look forward and decide whether you want to keep doing the same thing next year. In this tax update series, I'm going to break it down step by step which rules actually apply to you and where people most commonly lose money. If you don't want to repeat this every year, make sure you follow, because taxes won't automatically save you money. If you don't plan, your taxes decide.